Hey guys, in this video, I want to talk about a new stock that I recently purchased for my portfolio today. We'll go over what that stock is, which you can probably tell by looking at the screen, and then go over some information about the stock as well as why I bought it, what role it's going to play in my portfolio before wrapping up on looking at what the dividend potential and yield on cost potential for this stock is over the next 10, 15, 20 years. Now, before getting into this one, if you like this type of content, please subscribe to the channel, like the video. Would love to hear your thoughts about this company in the comments as an investor or just as a consumer. Maybe if you like some of their products, would love to hear from you as well. Okay, so obviously the stock that I am talking about today is the Coca Cola company. I have bought over the last week 55 shares of the company, so about 32 to 3,300 US dollars. And some of the rationale as to why I bought this company. I'll be honest, I've had a lot of USD hanging around in my USD account. And unlike my Canadian account where I can get 4 or 5% on my cash, I really don't have that avenue. So I've been a bit restless holding $10,000, $15,000 of American money in an account with interest rates where they are right now. So that's really gotten me a bit more inspired to allocate that money to existing names, to new names. And Coca Cola is a business that I've had on my watch list for years. I think it's a great business. They own great brands, great operating model. They just have traded pretty expensive, and I don't think that's changed. They're still a pretty pricey company. If we go back down and look at some of their indicators here, market cap over $250 billion. They have a trailing PE of about 27 times. One of the things that propelled me into buying the stock is while their trailing P is about 27, their projected PE for 2023 is closer to 22. So I can get behind a 22 PE a little easier than a 27. Still a bit higher than I like to pay, but for a company like this, I'm willing to start averaging in at that levels. And then if the stock does go down, would be open to building this into a bigger position. But right now, just the 55 shares is what I have. I got a yield on cost of about 3% after the recent dividend increase, which, I'd say is not bad, not great, but they do increase their dividend every year for the last 50 some odd years. We'll go into that a bit later in the video as well. Would love for you guys to stick around for that as we talk about what could the yield on cost be 15 years from now, 20 years from now. Right now, it is 3% starting. So we'll see where I think that could potentially go in, a conservative forecast and then a bit of a more aggressive forecast. But overall, when I look at this, even within just my Wealthsimple portfolio, for those of you who follow some of my other videos, this portfolio here is about $175,000. So still very small position relative to the broader portfolio and portfolios that I own. So I'm just kind of nibbling my toes into Coca-Cola here, given the valuation isn't a steal by any means, but it's a place that I think I can get a better return on my money over the short to medium term than the general stock market. And it's a good opportunity to, or not the general stock market, but then holding US dollars in an account. And I think it's a good opportunity to average in dollar cost average into Coca-Cola. Realistically, if it goes up 10, 20%, I may just drop it given I don't have a big position built out. But adversely, if it goes down 10 to 20%, now we're talking about earnings multiple in the teens, and I can get behind it in a much bigger way. So I like the play to kind of just start nibbling into this company. Going into just a couple slides about them before going into the whole mechanics of their dividend and where I think their dividend can go. This business is not a fast-growing company by any means, but I'd say they're very stable. You can kind of see here across their portfolio where they play. So they own a lot of beverage brands from obviously Coca Cola, Diet Coke, etc., but to Schweppes, Fanta, Fresca, Smartwater, Dasani. I can go on and on. Minute Maid, Powerade. They bought Costa Coffee, so they own coffee chains across Europe as well, I believe, that they're looking into making the consumer products. They started producing energy drinks. They started producing Topicino alcoholic beverages. So they're really trying to take a big bite out of the the overall beverage category. You can kind of see here even 5, 6 years ago, their addressable market was about $650 billion. And with adding in more hot beverages with coffee, alcohol, stuff like that, they've doubled their addressable market. So some people think Coca Cola can't really expand their market presence. Yeah, they're in very developed categories, but they're also breaking into new huge beverage categories that they previously haven't really played in, and leveraging their operation, their distribution, their scale, and their skill at building brands and whatnot in those new categories can potentially bring a lot of incremental value and revenue into the company. So that's something that we'll be looking at. They also claim to have pretty reasonable category growth over the next 3-4 years in some areas that they play pretty heavily in, which is good to see that they have some secular increase. Lots of people talk about risks of colas and more sugary drinks maybe becoming less prevalent in certain parts of the world. That may be true, that may be flatlining a bit, but they're still a big part of the revenue and they still seem to be pretty resilient. But while that is the case, Coca-Cola is doing a great job of investing more in healthier alternatives. I believe they bought Smart Water, Body Armor, other types of drinks for different use cases, as well as we just discussed, coffee, energy, etc. So I do think that while a very developed company and marketplace they play in, there is opportunities for reasonable growth. I don't think this is going to be a high-flying company by any means, so we're not going to forecast that. But it's one that I think it's relatively limited downside over the medium to long term, given the stability of the markets they play in and their dominant market position within that market. Now, going on to the dividend. So they currently pay 46 cents a share a quarter. So each share is paying $1.84 in dividends annually. I bought 55 shares, so I'm getting just about $100 US a year right now in dividends. So I didn't do that on purpose necessarily, but just like that, just with that purchase, I have $100 more of disposable income a year from my entry investment into the Coca-Cola company. But what's interesting about this company is while they don't provide a huge level of growth and they don't provide a very large starting dividend, they're kind of in that middle point where they don't have a bad dividend at 3%, and they still do grow every year. So when looking just over the last 10 years, they've grown from $1.12 a share to $1, I believe, what was it, 84 now after their most recent increase. So they have increased pretty dramatically on the amount they're paying out over the long term. You just need to be patient. And that really comes to life when you see year over year over the last 30, 40 years. Like I said, I think we said we're $1.84 now, give or take. And as we go down even to the early 2000s, we were at 50 cents a share. So we're up 300 to 400%. Going to the 90s, it starts getting crazy how much they've compounded the dividend. They were a dime a share in 1990. 30 years later, they're 18 to 19 times that. So it really goes to show if you just hold these companies, you buy at a reasonable starting dividend yield, and you just ride the annual dividend growth. Some years it may be 1-2%, but then when they go into a good time period for the business, you can start getting these 10%, 15% increases like what you've seen from PepsiCo over the last number of years. Then just looking at the business's dividend growth from a chart, you can kind of see here what I mean. I tried getting the best chart for you guys, but this kind of had the longest time horizon of what we just shared on the last slide. So you can kind of see these little increases kind of look not meaningful, but then in certain time periods when the company's doing well, you see them go up more and more and more. These are probably like 10% increases. And then when you step back and look at a 20-year picture, you go from 10 cents a share up to 40 cents. All of a sudden, your yield on cost has gone up 400%. So this is a really powerful investment tool to buy really good companies, hold for a long period of time, reinvest dividends, as well as ride annual dividend increases. And when we just look at what that could do as an investment in terms of yield on cost for someone who's willing to hold it out over a long period of time, this is kind of what I modeled out for Coca Cola at these valuations. So currently bought 55 shares. This was about my initial investment, about $59.50 a share. I'm paying $1.84 a share, $100 in dividend income. Yield on cost is about 3.1%. If I was to reinvest all the dividends I got from Coca Cola, as well as expect 3.5% dividend growth annually, which I think is very reasonable, if not conservative, seeing as even over the last 10 years where they've had some challenges, they've grown their dividend about 5.5% annually. But if we are just to assume this, after 10 years, I'd get to about a 6.1% yield on cost. Nothing to write home about necessarily, but also not too bad. And then the compounding really goes into effect between 10 and 20 years. It doubles again from 6% to 12%. And now I'm 20 years later, I bought a really safe company that had very limited downside, global exposure, very profitable, and I'm getting a 12% dividend essentially on my initial investment from 20 years prior. Now, I'd say that's not a best-in-class return by any means, but for a safe investment, once again, like Coca Cola, that is not really at reasonable risk of going bankrupt or losing 75% of its value or something, and you're getting paid along the way to wait. I think this is a good outcome of a conservative model to have, and for investors that have different stocks play different roles, this is a good safety position to have, and kind of, I don't like saying guarantee, but kind of have a more stable and realistic chance of getting a double-digit yield on cost 20 years from now. Maybe a less chance of having a 50% yield on cost, but also less chance of cutting their dividend and providing you no income 20 years from now. So this is definitely a stock to play and fits the role of a safer stock in your portfolio. This is kind of, I would say, on the more conservative side scenarios, you'd end up at 12% after 20 years. Now, moving over into what I think is probably a more realistic scenario based off of how the company's been increasing over the last 10 years would be closer to a 5% dividend growth rate over 20 years, just based off of how much free cash flow they're generating, where they're investing, their ability to do this over the last 30, 40 years. I think this is a very fair 50-50 scenario, and that would get you at about a 17.3% yield on cost 20 years from now. And, I think that's a lot better, obviously, than 12%. And what I'm kind of hoping for or expecting out of this company over the next 10 to 20 years. And I think at that point, you're starting to get 17% dividends on stocks, 17% yield on cost, rather, on stocks that you bought 20 years ago, without making any crazy or outlandish predictions or projections or need something crazy or a miracle to come true. I think that's a really solid investment to make if you're a long-term investor. And then going over to the more bullish scenario, if you think that Coca-Cola can really break into coffee, really break into energy, be a leader in those markets in ready-to-drink beverages, maybe make a bigger play into alcohol, which they're dipping their toes into now, and they can do it really successfully where they have revenue dropping down to the bottom line, then maybe a 7% dividend growth rate over the next 10 to 20 years is not crazy. And in that scenario, you'd be yielding 28% 20 years from now. Now, if anyone could give me a projection of a stock that I can be yielding 28% on my initial investment in 20 years from now that has very limited downside, global brands, big business in the categories that are very stable, I would sign up for that. So I think this would be a phenomenal outcome for me in this investment if I did hold it for this amount of time and this dividend CAGR did come true. But hopefully this can kind of just show you the power of compounding dividends, reinvesting your dividends into more and more shares over very long periods of time, and how you can go from a 3% yield on cost today to almost a 30% yield from cost 20 years from now. If you're an investor in your 20s or your 30s, this could really help you in your efforts to have dividends assist your monthly income or your retirement. And even if you're older than that, in your 40s and 50s, and you just want some inflationary adjustments in your dividend income, you can go to bed at night with Coca Cola feeling pretty good that your $100 that you're getting a year today in this small example is going to be protected in terms of the inflationary adjusted value 10 years from now, 20 years from now, since you're getting that yield on cost and that increase in dividends every year. And this is a category with pricing power as well. And as costs go up, you can expect Coca-Cola to adjust for that in their business model and take the price of their product up as well. So that's the video for today. This is a stock that I'll be potentially adding more to if it goes down. If not, we'll see how it goes and what other opportunities are in the market. But I just wanted to use it as a good case study for what a stock with a reasonable starting dividend yield and reasonable dividend growth over time can really deliver you as an investor over 10, 20 years if you're patient with it and you hold for the long term. So if you like this type of content, please subscribe to the channel. Please like the video. If you own the company, have done research on the company in the past, would love to hear from you in the comments, and I'll see you guys in the next one.